Hey everyone, today I'm going to take you through a trade I took during the London session on gold. I'm going to show you the full process from setting up the trade to executing it and eventually taking my profits. So I always start by marking out the key highs and lows from the Asian session. These levels are important because they often act as liquidity zones and price tends to react when it reaches these points. Once I've identified those levels, I keep an eye on how price behaves around them. As we entered the London session, I saw that price swept liquidity above one of the zones I marked. This gave me my first potential entry, but here's the thing, I missed it. It happens. That move would have been a 94 pip trade, which is about $940 if I was trading one gold contract. But instead of chasing, I decided to wait for the next best setup. I waited for price to pull back to a discounted level. That's the midpoint between the high and low of the range I marked. That's where I zoomed into the 1 minute time frame for more precision. And this is where the RSI comes into play. I was watching the RSI and saw it was in the oversold zone, which often signals a potential reversal. Combine that with the pullback to the discounted level, and that's when I decided to take the trade. Now, I entered once I saw the bullish candle that broke structure to the upside. This break in structure is key because it confirms that price is shifting and momentum is returning. So I entered the trade with a risk of $120 and was targeting a 4.42 risk to reward ratio. As the trade played out, I kept an eye on the momentum. I didn't just set my entry and forget about it. I was watching for signs that momentum was slowing down. And when I saw the RSI coming out of the overbought zone along with the candles losing steam, I decided to exit the trade. At the end of the day, I risked $120 and made $500. That's a 4.42 risk to reward ratio. It was a solid win, and it all comes down to staying patient and following my plan. I also want to mention that I track all of my trades in my ultimate trading journal. This journal helps me stay on top of my entries, exits, risk reward ratios, and even my thoughts and emotions during each trade. If you're serious about improving your trading, I highly recommend checking out this tool. It's free and fully customizable to your needs, so you can tailor it to your own trading style. That's it for today's trade recap. If you enjoyed this breakdown, make sure to drop a comment below and let me know what you'd like to see next. And if you're interested in learning more about how I approach the markets and spot my setups, I'm happy to do more in-depth videos like this one. Also, don't forget to download my Ultimate Trading Journal for free. It'll help you track your trades and refine your strategy. Make sure to like, subscribe, and follow me on Instagram and Twitter for more insights. Thanks for watching, and I'll see you in the next one.